Let's have a look at the top economic stories of the week that went by. Amid an influx of inflationary events, the unavailability of liquefied natural gas in an expensive international spot market has come as a blessing in disguise for Pakistani consumers, as the average LNG cost has dropped by more than 15% for July owing to long-term supply contracts with Qatar. Pakistan has two long-term contracts with Qatar, one involving 6 cargoes at 13.37% of Brent signed by the previous PMLN government, and 2 to 3 cargoes contracted by the PTI government at 10.2% of Brent. It may be noted that LNG's basket price in May had touched a record $22 to $24 per MMBTU owing to a string of spot cargoes procured by the new coalition government in the first month in office to meet energy shortages. The government notified 8 private sector professionals on the board of directors of the State Bank of Pakistan to ensure smooth functions of the policy making of the central bank amid challenging external account position. Under the SBP Act, the government is required to appoint 8 non-executive directors for a term of 5 years. The board is responsible for the oversight of affairs and functions of the central bank and to supervise the management. Inflation measured by the sensitive price index decreased by 0.22% in the week that ended on July 21st from the first week amid a slight decline in prices of essential food items including vegetables. On the other hand, the year-on-year increase in SPI was 32.82%. The stock market suffered a bearish momentum in the first half of the trading session on Friday on the back of inflationary and political concerns. However, the bulls made a comeback in the latter part as investors resorted to value hunting across the board, pushing the benchmark back into the green zone. The trading volume increased 8.4% to 171.2 million shares, while the traded value went up 10.5% to $20.7 million on a day-to-day basis. Foreign investors were net buyers as they purchased shares worth $0.34 million. Moving swiftly to meet a precondition of the International Monetary Fund for an economic bailout, the National Electric Power Regulatory Authority on Friday approved for notification Rupees 7.91 per unit increase in Uniform National Tariff and its application in 3 phases. As such, the average tariff increase would become effective at the rate of 3.5 rupees per unit during the current month, followed by another 3.5 rupees per unit in August-September billing and the remaining 91 paisa per unit in October. The rates will be equally applied across the country, including K Electric. Rice exports crossed the $2.5 billion mark during the 2021-2022 fiscal year for the first time in the country's history. The volume of rice exported, both basmati and non-basmati varieties, this year was over 4.877 million tons, which was 1.19 million tons more than last year's figures of 3.684 million tons. Basmati rice accounts for more than 0.75 million tons of export volume and more than $69 million in financial terms. The rupee hit another record low of 228.37 against the dollar on Friday in the interbank market amid analysts' call for the central bank's intervention. The decline in the rupee's value is in continuation of its free fall against the dollar that's been witnessed throughout the week. The greenback added another 2 rupees to close at 230 rupees in the open market trading. The Economic Coordination Committee of the Cabinet on Wednesday approved the import of 300,000 tons of wheat and 200,000 tons of urea at 8% and 17% cheaper rates, respectively, at a total foreign exchange cost of about $222 million. Pakistan's non-textile exports grew 25.85% year-on-year to $12.46 billion in the outgoing 2021-2022 fiscal year, owing to a partial revival of international orders and the government's support schemes. Overall growth in the non-textile sector is mainly led by the value-added sectors. The non-textile sector has yet to receive full orders to pre-COVID levels.